All right. Good morning, everybody. Welcome to the Premarket Rundown for March 29th, 2023. This being our daily session where we go over any and all news, information, and most importantly, the mindset necessary to break down, all that news and information that will allow us to remain consistently profitable here across these crazy volatile markets. As always, I'm your host, Adam Holland, stock options expert market strategist. We're going to dive into what is important to go over today. Camera, can we get you to focus in? Can we get you acting right? Awesome. Awesome. I hope everybody had a nice morning, a great restful night's sleep, and a good morning. I actually woke up before my alarm this morning, so I guess that means that I had a good night's sleep. Either that or the birds outside my window were very vocal, but regardless, got up, got that workout in, right? Got that morning routine in. Super, super, super important to remain disciplined outside of markets so that you can remain disciplined inside of markets. And I'm happy to kind of get into what we have going on today. So let's make sure that we got everything in order. As always, whether you're watching this live or via replay, make sure to drop that one in the comments signifying your intention to get 1% better by the end of the day. You don't have to change the world each and every day that you wake up, right? You'll change it just by hammering away and getting 1% better each and every day, right? And that's what we're aiming to do here. So that's all you got to do. That's all you got to strive for. Yes, Vivian said it's a beautiful morning. It is a beautiful morning, right? I'm glad to be here, glad to be alive, glad to be closing the gap between where I am and where I want to be. And also, it'll be very nice taking profit this morning, right? After positioning for that lesson that we saw in motion yesterday. For anybody, watching this via replay, we had a very great example of channel trading yesterday. So yesterday we got weird movement. It was movement that we identified as weird early on. Every time we went and we set a new high, then we turned right back around and set a new low, and it faked a lot of people out and had a lot of people confused, right? Had us confused. And then recognizing, okay, when you see weird movement like that, what are we likely in? A channel, right? Just made a reel about that. So from identifying that we're in a channel, what do? Well, you trade the channel until the channel breaks. So you buy calls, at the bottom of the channel. You buy puts at the top of the channel, right, to take advantage of the downside. You buy calls at the bottom and take advantage of that upside within the channel. And then typically, whenever you do see, right, a channel going on, typically we reverse to that opposite direction, right, once that channel breaks. And that's exactly what happened. So we were trading that channel down until it broke the upside of the channel. That's what we were, looking for, looking to expect. And then once it did, in this case, the channel was going downward, so we went and we bought calls. Now we open up big this morning, able to take nice profit on those calls, right? So it was a very great example of trading a channel that we got yesterday. And that definitely came in clutch, right, this morning in terms of profit, but also just in terms of lessons, right? So again, you want to make sure that you're taking inventory of each and every trade day and then saying, okay, what happened? How did I navigate this? And do I even know what went down, right? Because there were a lot of times when I just wrote it off to weird market movement. And I was just like, man, the market just sucks today. I don't know what to do. And then I started recognizing, okay, we're trading down within a channel, right? You go ahead and you draw, the downtrend resistance, and then you right click on that and you say, create a channel from this. And then you go and you drag that, to the bottom of that channel you're operating in. And it gives you, if you see that it fits, right, you're in a channel. And then from there, you can trade the channel until you break out of it, right? But overall, whenever you see a channel, you identify it, it's good because a channel will cost you money at the start, right? Why? Because every time you should be breaking out, you break down. So likely a channel is going to hit you with, a quick 1-2 punch before you realize what it is. But what's important is getting those reps in and recognizing what it is once you have that experience, right? So you're going in and you see, okay, this is a channel that I'm in. Now, how am I going to trade it? I'm going to trade it within the channel, right? Calls at the bottom, puts at the top, as long as we hold. And then once we break out, I'm expecting a breakout to the opposite direction of the channel, right? So in this case, we were a descending channel yesterday. So I expect a breakout to the upside on that channel. Once we break out of that upper, that upper line resistance, trend line resistance, downtrend resistance, right? Once we break out of that, I'm looking to get calls, right? Because that typically you get a parallel channel, like I talked about in another reel, before you get a reversal. And if you want to see all this kind of summarized, I made highlights out of the Instagram stories that I made yesterday. So you can kind of see, the highlights and what we have going on. But just an example of what you guys are learning real time through these reels, right? An example of how to implement that immediately. So again, if you're not watching the reels, right? You're not watching the YouTube shorts. Make sure you go back and you're watching what I'm posting on social media. That essentially is an extension of the course, right? What I'm posting on socials is an extension of the course. So make sure you're watching all those, right? If you're watching them and gaining value, make sure you show love, right? Like, comment, save, show love, because this is immediately monetizable information. And you want to be watching, rewatching, so that way, you're adding this into your memory banks, right? You're adding this into your tool belt, so that when you see action like we did yesterday in markets, again, it's exhaustive action to start. Again, identifying a channel, there will be hurt in the beginning of it because the normal setups that pay you won't pay you. But after that, you look, you say, okay, I know what you are now. I know how to work you. And then you end up, with a nice big payday here this morning. So just kind of wanted to go over the movement that we saw yesterday, and it's really cool to see again examples of what you're learning in motion, right? Again, that's reassuring, but also it lets you know, okay, if I see weird movement again, am I in a channel? And then to check for that, because you want to basically have a remedy for everything, right? It's like a doctor. The more that you see, the more that you experience, the more you can say, oh, hey, oh, this is that classic so and so disease, and this is how I treat it, right? But you have to have that experience. So this is a great time to garner that experience. And a great example, focus in, there we go, thank you, a great example of channel trading in action and how to handle it. Now, in terms of our news here this morning, our top headline, Alibaba breaking up. Come on, baby, let's start anew. Baba sang a new hit single released on Tuesday, with most believing it wouldn't be hard to pull off for the company. Investors were certainly down, doobie down for the move, sending shares of the Chinese tech giant soaring 14% during the session. So shareholders were big fans of Alibaba breaking up. This is a trend that we've been seeing from large companies over the course of the past 10 years, where these huge blockbuster companies that have hands in everything end up breaking up so that they can specialize right into smaller companies, and then they can specialize on what they do best, instead of you just trying to keep track of way too much. If you guys know anything about history, right, empires fall because they get too large. So it's better to just break them up, and Alibaba's looking to follow suit. Chinese tech stocks rose in tandem, including JD.com, ticker JD, NetEase, and Tencent, as well as the Japanese tech conglomerate SoftBank, which was one of Alibaba's key early investors. Now, the plan, Alibaba will split into 6 different units covering e-commerce, media, and the cloud, in the goal of boosting each group's individual business value. They include 1, cloud intelligence; 2, Taobao small business; 3, local services; 4, global digital business; 5, K-Now smart logistics; and 6, digital media and entertainment. Under this plan, we'll have 6 major business groups and other investments, each to be independently managed by its own chief executive officer and board of directors, according to a regulatory filing. Aside from Taobao's Tmall business, maybe they meant small business. Nope, it is Taobao Tmall business, which will remain fully owned by Alibaba. Each of the other business groups will also have the flexibility to raise outside capital and potentially seek its own IPO. So Alibaba is really splitting up fully into 6 independent businesses other than Taobao Tmall. So, quote, with such an obvious and unexpected catalyst on our hands, it pays to explore what exactly this new development could do for Baba shareholders, wrote Seeking Alpha contributor Growth at a Good Price. He explores how to play the restructuring, while other Seeking Alpha authors are also bullish on the announcement. Yeah, I'm not exactly sure what that means for Baba shareholders. Does that mean that you now own stock in all the other split off businesses? I doubt it. I'm not exactly sure, but we'll see. But overall, people are excited about the prospect. People love a stock split. People love, companies breaking up and the prospect of them owning, even more companies. So I think that, this kind of segmentation of their business is a good thing for Baba. Do I like Chinese stocks? Still, no at this point, just because of how volatile, things are regarding China, regarding Xi, regarding how decisions are made, with such unilateral, what is it, force, I guess it would be, right, since they don't have any checks and balances. So going deeper, the reorganization follows years-long headwinds for Alibaba shares. They have been absolutely getting destroyed, including a slowing economy in China and geopolitical tensions, as well as a broad tech sell-off and sweeping crackdown on Chinese internet companies. In fact, the announcement came a day after the company's legendary founder, Jack Ma, made his first appearance in mainland China after several months overseas, and has generally been out of the public eye since he gave a speech in 2020 that criticized Beijing's financial and business regulators. It also raises questions about what may happen with the suspended record IPO of Ant Group, which operates one of China's biggest mobile pay apps called Alipay. Alibaba owns 33% of Ant. So it seems like there's a ton of logistical things that have to get sorted out here, but overall, pretty big news considering the fact that, if you don't know what Alibaba is, it's pretty much like the Amazon of China. Pretty big news, right? That Alibaba is breaking up into separate companies. We got another huge headline here that has big implications for a number of different, household names. iBank, Apple has officially released its buy now, pay later service in the US, permitting purchase payments over time with no fees and no interest. This is bad news for PayPal, right? Bad news for other payment processors. Whenever you have an absolute giant that already has mass adoption moving into your sector, that is not good for you, right? We talked about this already when Apple announced they're moving into this sector. So select users can apply for Apple Pay Later loans of $50 to $1,000, which can be managed in Apple Wallet and used for both online and in-app merchants that accept Apple Pay. The solution was initially planned to be released in September of 2022 as part of iOS 16 before technical changes delayed the launch, though Apple now hopes to offer it to all eligible users in the months ahead. MasterCard and Goldman Sachs will be helping out Apple with payment credentials, while rival BNPL provider Affirm tumbled on the latest news. Is a bank charter for Apple in the cards? I think that's, very, very important at this point. At the point in which Apple becomes a bank, does Apple become too big to fail? And I think that is the key, right? We've seen from here, the old adage goes, if you get a gun, you can rob a bank. If you get a bank, you can rob the world. Apple becoming a bank and Apple really dominating healthcare are like the last two things that Apple needs before it just absolutely becomes the supreme company, right? Because at this point, you're getting all the health data, right? They already have all of our search data, everything else. And now they're also taking over finance, right? You have the Apple Card. So, they have access to, control of credit, right? And now they have their buy now, later, pay later experience. So at this point, Apple might end up taking out for a bank charter, and that might be in the cards. And at that point, where everyone who owns an iPhone, I assume they also want to bank with Apple. I mean, they just become a dominant banking force. So I think that's good news for MasterCard, good news for Goldman Sachs, right? Both of them as they're helping out Apple. But again, Affirm, right? PayPal in terms of like payment processing. So I just think that all of them, right? All of them, it hurts all the payment processors, a lot of those fintech solutions, because people won't be using them, right? Because you already have an iPhone. People like things that are seamless, things that are easily integrated, and that's exactly what Apple's doing. So Apple's buy now, pay later service releasing. Huge news. And the most amazing thing is that we're in Apple calls, right? Because Apple had a beautiful setup that we were watching coming into this week. We got great entrance yesterday, and now we have Apple releasing its buy now, pay later service. Cha-ching, right? Getting paid off of spy calls and Apple calls this morning. Gonna be a beautiful day, right? Knock on wood, of course. Anything can happen, but overall, can be a day where you hit your monthly goal in a day, right? That's the beautiful thing about trading is that you take nice setups, and typically you can have luck meet you in stride. Where Apple making this announcement at the same time when they are facing a very large breakout, not coincidental, right? They have people that can read the charts just like we can read the charts. They choose when to make these announcements, right? They say, hey, let's wait for our stock to be at a very, very amazing place where it can rocket for us to release this news. Why? Because that puts extra juice on the rocket. Now, moving on to our next headline here, going after the apes. AMC Entertainment was up 10% shortly before Tuesday's market close on a report that Amazon, ticker AMZN, was exploring an acquisition of the beleaguered movie theater chain. Jeff Bezos has been said to organize his entertainment lieutenants and investment advisors to consider such an acquisition, where hundreds of theaters would be used for a number of purposes, like promoting Amazon Prime's original films. That would be dope. Cross-selling grocery delivery. Ooh, groceries delivered straight to the movie theater, and even serving as product distribution hubs. AMC had a market capitalization of about $2.6 billion after Tuesday's jump, though it had slid nearly 72% over the past year. Bezos might also want to wait to see if the stock continues to erode or jump on a potential bankruptcy. That's true, right? AMC, you have huge locations. He could take half of those, keep them, movie theaters where he premieres, Amazon Prime content, then take the other half and turn them into Amazon warehouses, right? Turn them into distribution centers. I mean, that's stuff that he needs. Amazon at the end of the day needs real estate. because they need to build all these distribution centers. So AMC solves both of those problems. Could be cool, right? But overall, I mean, this is exactly what the apes need, right? The AMC apes, all my YOLO meme stock people. The fact that the fact that Bezos might acquire, definitely, just the rumor has AMC moving. So something to keep an eye on. Again, if you indulge in any meme stocks, don't put into it what you would not flush down the toilet, right? It's as simple as that. Don't put into it what you wouldn't flush down the toilet, because the way that these things move, it is the most volatile thing I have ever seen. The options are extremely overpriced. So again, do not put in anything that you cannot afford to lose. But exciting news, right? We've had literally three hugely exciting headlines back to back to back. What a pre-market rundown session this morning, right? Throw a 5 in the chat if you're learning something this morning. Now, we'll round it out here with hashtag bank crisis updates. So, quote, in light of the new challenges and priorities, UBS, ticker UBS, is bringing back, I thought I had, some chapstick, is bringing back Sergio Armati, who rebuilt and led the bank from 2011 to 2020 in the aftermath of the global financial crisis. So the move will help UBS figure out how to integrate Credit Suisse into its operations after conducting an emergency rescue of the troubled lender for $3.25 billion in stock. Now, Armati's first challenges will include laying off thousands of staff, rethinking its business divisions, and shoring up the confidence of investors, clients, and the overall banking sector. Now, fearful of the bank crisis, Seeking Alpha contributor Jim Sloan discusses the worst potential outcome and where you should put your money now. Thank you, Jim. But the beautiful thing is that when you learn how to read charts, you learn how to take advantage of things like options. You don't need someone to tell you where to put your money, because you can make those deductions yourself. Right? That's the beautiful thing about financial education, is becoming the weapon. Now, in terms of today's markets, in Asia, Japan is up 1.3%. Hong Kong is up 2.11%. China down 0.2%. India up 0.6%. The FTSE in London up 0.8%. Paris up 1.3%. Frankfurt at 1%. The Dow up 0.7%. S&P up 0.8%. NASDAQ up 0.8%. Crude oil up 0.9%. Gold down 0.4%. Bitcoin up 5.2% to 28,319. We've got a member of the Fed bar speaking at 10 a.m. That's important. We got MBA mortgage applications earlier, pending home sales at 10. So a few things that could cause a little bit of volatility, but nothing that seems like it, could really set off, a drastically different chain of events when it comes to how we'll move this morning. But overall, right, we are likely testing, or we are testing the daily downtrend here today. So if we do close above 398, kind of 50-ish by the end of the day, we're likely to continue higher, right? So that's your little nugget for tuning into the pre-market rundown that you get, right? This doesn't have to be the end of the run. Yes, we're up big overnight. We could be up, even bigger moving forward in terms of how we finish out the rest of this week. So definitely be ready to execute, right? Be paying attention to where we finish and be locked in, because there are plenty of opportunities to make money, right? Plenty of opportunities to make money. You just have to make sure that you are locked in and available to receive, right? It should be a very profitable morning. SPY calls paying off big. Apple calls paying off big. Can't ask for much more, right? You get the lesson, you get the profits, you get that foundation to move forward to create even larger successes. So let's wrap up here with our rapid fire bullet point rundown. What else is happening? Lululemon legs higher and earnings beat. Strong sales forecast. On the gas, Carl Icahn spent over $220 million in March buying this stock. Pepsi, ticker PEP, PEP, unveils new logo and talks digital investments. Let's see here. So he was buying Southwest Gas, so ticker SWX. So Carl Icahn spent $220 million in a gas company. So we have Carl Icahn and Warren Buffett both dumping tons of money into gas. I'm just going to say that and leave that there. Somebody sees something in gasoline where, even though, gas stocks have taken a little bit of a load off, right, and they sank a little bit, you have, very, very savvy investors that are sinking money continuously into energy stocks. Typically, they're privy to information that we might not be. So overall, you want to make sure that you can read charts and, kind of deduce this opportunity yourself. When you see something like that happening, right, they're likely doing this for a reason. So don't take your eye off energy stocks, right? Keep your eye on energy stocks. They were strong, relative to the rest of the market yesterday, up today as well. So keep an eye out for that. But Carl Icahn dumping $220 million in energy stocks. Between that and Warren Buffett, I don't think, right, you can forget about them. So let's see here. Pepsi unveils new logo and talks digital investments. FTX founder Sam Bankman-Fried charged with paying $40 million bribe. More layoffs. Lucid, ticker LCID, plans to slash nearly a fifth of its workforce. Judge rules Google should be sanctioned in Epic Games case. Micron, ticker MU, gets slight lift amid confidence in long-term outlook. Spicing it up, McCormick jumps 10% on latest earnings. New strategy from the FDA aims to avoid another baby formula shortage. And then here are the top 10 dividend stocks according to Seeking Alpha's quant rating. So that will wrap us up here for the pre-market rundown for March 29th, 2023. Come on, camera, focus in. We're not gonna close on a blurry note. All right. I think it does that whenever I change back to the YouTube window. But overall, we had a lot of very important headlines, right? Apple debuting its buy now, pay later. Alibaba, which is, the Amazon of China, splitting up into 6 separate companies, right? We have a lot of huge headlines that came down the pipeline. A lot of monetizable opportunities. Please make sure that you are locked in, and aware, just tuning in here each and every morning so that you can get, glean that bit of information to help you remain consistently profitable, because things are very volatile, but they are manageable. That is what is very important, right? People are still getting paid in this market, right? Trades still pay. You can still deduce what is going on. It might be tough, right? Yesterday morning started off tough. Had a few trades that went in the red, right? Had a few trades that we had to close that were red. But overall, you glean, okay, what is happening now that I finally deduced the situation? Let me figure out how to make money. And that's exactly what happened. And it'll pay, tenfold what was lost yesterday when we get that open this morning and moving forward, right, depending on where we close here today. So keep an eye out. Again, we're going to be looking at that area, that 398, what is that? Actually 398.50 area, right? We close above that by end of day. We're good to continue higher. We're opening over top of that right now. So all the calls swung from yesterday should be big green, nice big profits. If you want, you can close them all and just have a great rest of the day, right? But overall, if you got any value from this session, don't ask for anything in return other than showing love, right? Show love. I come here and I show love for free every day. Just show love to me. If you see the content, like it, watch it so that you understand it, because it can make you money, right? But also like it, save it, send it, comment on it, show love. And that allows me to continue to do what I do here each and every day. So hope everyone enjoyed themselves. You got 1% better. Congratulations. The best investment you're ever going to make is one of yourself. You guys did that. Continue to do that daily, and you'll see the payoff happen exponentially. So have a great rest of the day. I'll see you back here tomorrow morning for our next pre-market rundown. Have a good one.